Hello everybody, welcome back. Let's have a look at our mate Bitcoin. So Bitcoin, as we are making this video, we've pushed up to a major level of resistance already. So by the time you've watched this, it could have easily rejected and come back down to the bottom side of the range, or it could have broken out, or it could still be here. Anything's possible, you know. So the simple thing is to look at this. It's a very straightforward strategy of what's going on here, and a pretty basic setup, to be honest with you. One enormous, absolutely enormous descending triangle. There's triangles all over the market at the moment, and you know, they're not very useful in themselves. But if this were to break out from here, this would point up towards a new all-time high. Not immediately, because you know, if you watch this channel, you would recognise that I'm talking about a period of accumulation is most likely to take place between now and probably towards March. That's if we can hold this range, you know, hold above the $40,000-ish area, give or take a few grand. That's basically, you know, the line in the sand for me. We can talk, you know, about going down incrementally lower, filling that CME gap, which is what, mid 30s. But to be honest, that would damage the overall structure of the chart to probably quite a large extent, and we could really seriously entertain the very realistic possibility of an actual bear market being already obviously more than in play, but then continuation for a longer period of time. So yes, it's exciting to see a little move go up today. So we're above the 10 exponential at this moment in time. It's not the first time we've done that. We did that about last week. So the 10 exponential being this orange moving average here. So, you know, let's just zoom in a little closer to the most recent. Since we've been downtrending, we've been getting rejections from it. And this is the opposite of what you'd see in an uptrend. On a bullish uptrend, you'd get retests of this for buying the dip opportunities. This has been a pretty strong downtrend and basically being rejected from it pretty much every single time, rarely closing above it, pretty much getting rejected on it every single time. We had a little portion where we broke above it here and then got rejected from the descending trend line, which is basically where we are right now. So yeah, I mean, overall, I mean, I still prefer the sideways accumulation kind of vibe going on with this. And if we break outside of this descending trend, you know, this downwards resistance level, it's not likely to cause an immediate pump all the way up to its all-time high, even though that's what the measured move would suggest is its destination from coming out of there. The most likely scenario is if we do break out of here today, we could easily come up to test the top side of this. Well, it's not the top side; it's a very important portion within the accumulation zone. This is the top side of the accumulation. This is the mid portion where we spent all this time over here. So we could easily see a pump come up to that level. Currently, though, this is major resistance. So expect a rejection there just on the first pass. But as we near the end of the apex, obviously the trend gets lower each time. It does test our support each time, and it is more bearish than bullish, I have to say, for that reason alone. You know, diminishing returns on every single pump. You know, today what are we up now? 2%. That's the max it can go until it reaches this area of resistance. So tomorrow will be less, and the day after that will be less, to the point where it basically has no choice but to make a decision. Normally, the closer you get to the end of an apex, though, the more likely it is that you get a fake out, which is why I'm very much in favour of this being an overall accumulation zone. So breaking out of here, yeah, we could go up to there, people getting excited, going a little crazy, and then come back down to the bottom side of the range, where we could even go a little further down before we perk ourselves back up and trade within this accumulation area to finally break out at some point, probably not in March, but who knows. So that's the overall vibe still one of accumulation. We've been talking about this for ages. You know, we talked about how this dump could happen, and then when it happened, I said we're likely to stay within this range, which is what we're in at the moment. I expect us to stay in there. Doesn't have to happen that way, but that's my preferred outcome. Not because that's what I want, it's just that's the most likely, in my opinion, that's the most likely outcome. Despite the death crosses, despite being below pretty much all moving averages, being below this super aggressive downtrend, it's still, in my opinion, the most likely outcome. So we'll just have a quick look at some other aspects. We don't need to look at that. We'll have a look at the Dixie. So the Dixie, again, another component, not the secret sauce to the recipe, but just, you know, a part of it, like a sprinkle of pepper or something like that. It's not the be all and end all, but we are continuing with the uptrend. The uptrend again. On the weekly, we can see here coming up to basically find so far a candle body closure, even though it's at the top. below what used to be support may now be resistance. Similar to the way that Bitcoin's behaving, I believe the Dixie is looking to establish a new range, slightly lower than its previous one here, but then eventually find its way back out towards the top. So for those who think that the Dixie is done, I think it's unlikely that it's done. I think this was a very aggressive uptrend. We spoke about how the uptrend came to an end when the cheeky span touched the price action. About a few days after that, we got the dump because of the CPI report. It was an obvious oversold area, so some nice buyers came back in. The dollar's still fundamentally exactly the same as it was the day before that dump, but just like any chart, it'll need to establish a range before it can work out which direction it really wants to go. But fundamentally, I expect that the dollar will continue to go up while the fundamentals remain the same. So that will have a possible negative impact on anything traded versus dollars, including crypto. It doesn't have to bring crypto down anymore. It just means that the speed of the gains that we've been so accustomed to recently are likely to slow down. And it would speak to, you know, best case scenario, while the dollar is continuing to find its actual peak, which it's not peaked in my opinion yet. Bitcoin can hang low and just mess around in this zone, maybe for the best part of, you know, the next few months. You know, that's how I'm seeing it play out. We were talking about how the Ichimoku cloud obviously is 26 periods behind and in front. So this is the 26 periods ahead of price action. This cheeky span is obviously 26 periods behind. So we can work out that if we've been down here for what's this, about a couple of weeks almost, this is where the price has been hanging around, which means that soon we're going to have a cloud go down like this, and the cloud will sort of shrink down to these levels like this, and then that will be the top. The bottom will be around here, and this will allow for the price action to you know, stay within an accumulation zone and effectively break outside of the cloud. Once around on top of the cloud, that's where we can look at particular buy signals or trend continuation signals. But until we're outside of that and we're still hanging around underneath a big red cloud like this, I wouldn't expect a break outside of it. It just doesn't seem feasible to me. It seems more likely that we will spend time down here and we'll wait for the cloud to, which is, you know, this is going to be the cloud kind of roughly, you know, rough area, and if we, as long as we don't make lower lows, we will basically break outside of that cloud some point end of March into April. Anyway, we'll see where this takes us over the next few days, if this pump just gets sold back down into the bottom level, or if it breaks out and then we just basically hang around in the accumulation zone like expected. I'll leave it with you there, guys. Good luck with your trading. I would not go too crazy on derivatives right now. I would be more interested in this area over here once the cloud has disappeared and we can start to look at proper long opportunities that we can hold for a prolonged period of time. But there's nothing wrong with getting yourself all set up on all your exchanges ready to go. Just don't get too trigger happy while we're in this very indecisive, choppy range that's still got a lot of things outside of the chart. You know, like international events and this, that and the other that still are playing a major role in what's causing this chart to behave this way. Right, I'm going to leave it with you there, guys. Thanks for watching. Hope you have a nice day. Take it easy.